Part two of how to use nqsignals.com. In this video, we're going to cover why it's important for you to rate signals, what additional indicators you could use, and then how to avoid choppiness to get the most out of these signals without giving up a ton of your profits. Let's get into it. Here's why it's important for you to rank each signal. We use what's called dynamic feedback with these signals, which means that if you thumbs up or thumbs down a signal, that has a direct impact into what the next signal is going to be. For example, if you give a bad signal, you go thumbs down on a couple signals, the system is going to look at it and say, okay, the way that we're analyzing this information is incorrect. We need to potentially look at the opposite side to potentially signal. What this does is it does two things. It helps us find trends quicker, and it helps us identify when trends are over much faster as well. It also, a third thing, is helps us identify choppiness. When we have a good signal, bad signal, good signal, bad signal, now the system understands, okay, maybe we're looking at some chop. Let's lower our confidence scores while we wait for price to break out and continue its next trade. Now, don't worry about getting every single rating correct. There are going to be hundreds of other traders that rank these signals with you. But if you feel like a signal was good, mark it good. If you think it was bad, mark it bad. And you also can skip a signal if you're like, hey, I don't know which one was which, just skip it. Go to the next one. But what we're going to build essentially is this community style software that's going to mold into the way that we want to trade. So the more of you that rank these, the better the software is going to get over time. Part two, additional indicators you can use on your chart to help you out. Now I use four basic indicators, okay? And they're super simple. Number one is the Keltner channel. The reason I use the Keltner channel is I like seeing where price is in relation to where it averages and maybe where it's been. And the Keltner channel helps me do that. So it's these yellow lines right here. Anytime price is outside the Keltner channel, I'm like, okay, we're probably moving up here. If we're pulling back, we might pull back to the Keltner channel. If we're inside the channel, we might be a little bit choppy. It gives me some context as to what price is actually up to. The second thing I use is a 9 EMA. So let me go ahead and turn off the other ones and we'll just focus on the one. And we'll turn off VWAP too. We'll get to that. So I use a 9 EMA just to give me some idea of which direction we're in or if there's no direction at all. So if it's super flat, I know that we're choppy. But I want to take trades that align. I don't want to take short trades when price is above the 9 EMA, and I don't want to take long trades while price is below the 9 EMA. I certainly don't want to go against the trend. The 9 EMA helps me see that. Now we can add the 21 on here, or the 20, I guess. Same kind of thing. When I have both of these moving in the same direction, I now know, okay, I'm looking for some long trades up here. Right now, I'm probably looking for some short trades because we have price below both of our moving averages. Okay, you combine that with the Keltner channel, and now, okay, I've got price sitting in the lower half of the Keltner, and we're kind of moving down here a little bit. So all of this helps me out. Now, what I also use is VWAP, okay? And I think every trader should use VWAP. Now, I use VWAP a couple different ways, but primarily to see if price is flat or if we actually have a real direction, okay? And the system uses all the same things I just mentioned to you as well. The system includes a lot of different indicators and price action patterns and all kinds of stuff. But I use this just to give me an idea. Now, this is VWAP, that red line right here. I use the first deviation of VWAP, which is this blue line here and this blue line here, because price does dance at these levels quite often. So I use VWAP as a way of just understanding where price is, and oftentimes when price is near VWAP, it's very, very choppy. This can help me avoid taking really bad trades by simply opting out of any trades while price is near VWAP. And sometimes, like this is a great example right here, you have trades that you can clearly identify. Let me add on our EMAs for a second. Like, hey, price is below my EMAs right here. Man, it's dumping down. It might hit VWAP. We've caught multiple trades like this where we're like, I think price is headed towards VWAP. We jump in the trade and it accelerates right into it. Okay, every trader in the world has VWAP on their chart, and the ones that have the most money definitely pay attention to it. So you need to as well. But this is all we need to do. Now, other times, VWAP can act as a magnet, or it can act as a magnet both ways. Towards it, okay, and basically away from it. But here's towards it once, here's towards it again. So off of a reversal, I'd be curious to know if I could take a long trade maybe on this candle or this candle right here, headed towards VWAP, because I know price and its velocity will speed up, okay? Other times, VWAP can act as a nice little resistance or a support, okay? But having VWAP on the chart does give you a little bit more context as to what's going on. And if VWAP is flat, you know you have a flat market. And just about any trade you get into has the potential to turn around on you at any point because VWAP is so close. So keep that in mind. Part 3, how to avoid choppiness. This is going to start at the signal level. Now, it's going to be hard not to overtrade at first with these signals. You get one every single minute. It can even encourage you to trade more, but that's not the goal. The goal is to understand what to do and what not to do, when to do what to do, and when not to do what not to do, okay? And so a lot of words for saying we want to understand these signals and use them to our benefit, and here's the best way to do so. When there is choppiness, we want to start with the signals. The signals will tell us first before the chart will, okay? The way that I know choppiness has occurred is 2 things. Number 1 is, see, I see this 1154 right here, 1154 right here. You get a signal every minute, but there's also a 2-minute chart patterned in. So every even number, you're gonna get 2 signals. You'll get one for the 1 minute and then one for the 2 minute. When those are not the same, choppiness. When those are not the same, there's confusion, there's choppiness. Easy to understand. Now on the chart level, it's very clear because we can look at price and say, okay, it's basically flat, we should wait. And so what I like to do is find the top and the bottom of a region and just say no trades until we break out. And this is kind of how I would do it. I'd say, okay, touch down here, we kind of touch down here. I might even add one right here. And I'm not going to take a trade unless price breaks above here or breaks below here. And the reason that I want to use kind of this range and then a breakout is because the signals happen to align really well with that strategy. Now, you don't have to go through and chart all of this, but this will be something that this will be something that you can easily recognize. This is a better way of saying it. Now let's look at everything we have going for us. Our 9 and 20 EMA are basically flat. Our Keltner channel, basically flat. And we haven't made a new high or low recently. And so this is like, okay, prices are just sitting right here. No matter what signal we get, we will wait because I would bet that price will break out of this little 50-point movement before the day is over. It might take 5 minutes, it might take 50 minutes, but it will happen. The reason we want to avoid choppiness is this is how we donate money back to the markets. This is how we give back profits. This is how we extend our losses, is by trading when price is not really making a clear direction. So what you're going to do, again, is just find a top and a bottom of a range and then just wait. And I would prefer you were a little more conservative at first and then you could be more aggressive. So like a more aggressive approach would say like this, and then you'd say like that little double bottom kind of ish right there. And then if price breaks below here, we could go short, assuming the signals align. And if price breaks above here, we could go long, assuming the signals give us that. Now, it's very important for you not to trade this strategy and just take the trade as soon as you see it. Let the signals like basically give you that confidence too. The reason for that is the AI can see way more things than your eyes can see, and it doesn't have the emotion that you have. And so it's able to look at things and say, that's probably a reversal. That's not going to be a good trade. We shouldn't take that. Out of curiosity, I want to know what this signal is. So we're at 12 o'clock. I got a strong sell signal and a weak sell signal. Okay, so not bad except for the fact that price just rolled all the way up. Started good, finished bad. So we would actually go and rank these poorly, just like that. There we go. But this is why we don't trade chop. Sometimes the system can also get confused too. But the way we can save it, or at least help ourselves, is by saying, all right, well, here's our range. No trade until price breaks out. And it will break out. And when it does break out, your system will be there to complement you and then also take and signal the right trade for you. So that's how you essentially avoid choppiness. Now, let me say this final part. You are going to lose trades. You can do everything right and you will still lose trades. The markets are too efficient. Okay, so what I don't want you to do is when you lose a trade or two, to start playing the blame game. It was this, it was that, it was this, it was that, it was that reason, it was this reason. No, the markets are very efficient. If you could be perfect every single day, forever, it would no longer be called trading. It would no longer be called investing. It would be called something completely different. So you're going to lose. Know that going in. You're going to lose trades. What you can do with that information is just trade the same style the entire time, 3, 4, 5 weeks at a time. You need a large enough sample size to say, okay, now I know with this strategy that I'm using, I get into trades too late or too early, or my exit is too soon or too late. You can modify with a large enough sample size. But if you keep jumping from strategy to strategy to strategy to strategy, what you're going to do is basically jump into untested, unknown waters. So there's going to be things that you don't know. There are going to be things that can hurt you. There are going to be things that you aren't even aware of. The unknown unknowns of a new strategy. Every time you change, you basically reset your trader clock from when you start to when you're going to be successful. Every time you change your strategy, you go from I'm close to being profitable, had a couple losses, let me restart. And it's like you were almost there, but you gave up on it. So stay with your strategy. Don't change a thing. Let the signals guide you, but use the same criteria to get in and to get out, and give it 3 or 4 weeks. And let's look at the results holistically so that we can make those adjustments if we need to. Reach out to me, send me a message if you want my critique or you'd like my input on what you're doing, or we can just celebrate together with all your wins. Who knows? But you can utilize myself and the community as well. That's what it's there for. But don't jump around from strategy to strategy to strategy, because the grass isn't always greener. It's just been watered there, but it's fertilized with shit. Okay? That's just the truth. It's fertilized with shit. Okay? And that's how the grass is greener. But you have to go through the shit so that you can get that green grass. So stay with your strategy, water where you're standing, and it will be as green as you would like. All right? Let's get to it.